Hey, good morning, good afternoon, wherever you are. Technical science at work here. So I'm doing this newly weekly prognostication for upcoming week, looking at certain events. Obviously, the first thing I do is take a look at the economic calendar. So last week we had a lot of Fed talk. We've done a lot of talking, and then we had um, very notable price actions here for personal outlay on Friday, and we have a consumer sentiment on Friday. But for next week, I will switch to another economic calendar. For next week, we have a non-farm payroll at 8:30. The good, the reason why you want to be able to have this is to be able to know what's going on throughout the week when you have a lot of price actions, so you don't get caught by surprise of a big move that can go either way. It can go in your favor or it may go against your favor. It might do both. It may go in your favor at once and then blow your account. So yeah, so for throughout the week we have for Friday, this is the most notable one. It's at 8:30 Eastern, always 8:30 Eastern. We have non-farm payroll 8:30, and on Thursday we have the jobless claims also at around 8:30, and on Wednesday we do have the ISM manufacturing, and it's not as big as it used to be, but you never know, they might use this as an excuse to push and move price around, so be careful with that. And then also on Tuesday we have the jolts numbers, the jolts jobs at 10 a.m., and then we have consumer confidence on Tuesday. So last week we had a consumer sentiment, but we're gonna have to have we're going to have the consumer confidence on Tuesday. Um, you can make whatever you think what that means for you. But my thing is just right around those time they use this as a smoke screen to move price around. So just be careful. You either stay out of the market and wait 15 minutes after to get in, or you can trade it with a very very low leverage. So on Monday there will be very little actions, but we will be having some Fed talks. So you might see price getting strangled a little bit, especially early in the morning. So I would avoid, um, kind of like avoid. I'll be careful on Monday morning, see what's going on because you had some Fed stock, but they usually, those Feds members, they usually do not have a big impact on the market. All right, so now let's take a look at some charts to see what happened last week. So last week, so it's the same chart. You can take a look to see this one is a 15 minutes, this is a 5 minutes, this is a 1 hour, and this one is a daily. So let me zoom in on the daily. So as I move within the 15 minutes, you can see how price is moving around. So last week we have price dip into the lower third portion of a daily fair value gap here on Thursday. So as I put my cursor here, okay, I want you to take a look at the daily here also, how price move in that gap right here. Now, let me make sure I can highlight it for you. This is the gap I'm talking about. Let me change the color. Yeah, I'll make it slightly blue so you can see what I'm talking about. There you go. So yeah, so price dip into that gap on the lower third here on Thursday, rally up, come back down, got close to half of it, and then rally again. And then on Friday, I can change the screen real quick. It got into another gap. This one is completely trade within it, outside, and then you see a little bit of resistance here. A lot of, I mean, not resistance, just a lot of support here. And then it went higher and higher. So based on those price action, I don't see any indication or scenario for any bearish scenario. I believe price will probably keep climbing higher. So, what most likely then the reason why I say it's not bearish is because there's this low here. It did not go any lower. So it literally got in the upper quadrant of that wick here on the daily wick and then repel higher. More than likely what you'll see on Sunday, September 28th, price will open, gap down some, possible bullish scenario. So once he gaps down, it will keep going lower, maybe into London overnight into September 29, and it'll probably just get right into 24,583, maybe either done London hour or in New York open at around 8:30, 9:30 a.m. You'll get in that level right around that time and then start going back up. It may get all the way here or it may get just at 634. Again, this is all probabilities. So there are no certainties. So we just gotta watch what price does, see how it reacts, and then you take your action accordingly. So possible bullish scenario, it'll go lower first, get to this level of 24,583, and then resuming back up to, I say, right, if you're looking at this quadrant over there on the lower left here, it'll get to the level of 24,888. And once we get that, we may get a little pullback and then keep going higher and higher. That's a possible bullish melt up scenario, right? Another scenario of bearish, what you'll see, price will open, gap down, get probably well close to 24,634 and keep going back. It'll go higher and higher. And I will probably target 24,781 here if you're looking at the 1 hour chart on the left hand side, lower left hand side. And what you'll see, a little small pullback. It'll go higher over the night of London and probably in New York open. And then it'll just nudge it, go up, close enough to that, and then keep falling back down again. And once price close below, let's say below the level of 24,420, if you close below it, what you'll see is you get a nice little reaction up on the daily and then plunge back lower and lower. And if it's a real possible bearish scenario that I think, it'll keep going lower, probably to the level of 24,240. And the reason why I'm saying there's a possibility for a bearish scenario is because if you're looking at the seasonality, seasonal tendencies, what you usually see is price usually dips around mid-September all the way down into around after the first week of October or mid-October, and price start riling back up. And this is data going back 20 years. So what you can see, as you can always see, it peaked here historically on 918. I believe it was around the time when the Feds cut the rates, or maybe it was a little bit after, and price started going up, and then now still going back down at the same time historically when price is going down. And as you can see, there's a little bit nudge, a little bit of a pullback up, which is that's going on right now. And what you can see is still going lower, going back up again, and then keep going down lower. Just like I mentioned earlier, what you'll see is the price will gap down and then go back up, go back down again, go back up, very close to this level here of 24,888, and then keep going back down historically. So that's what I see for coming up to this week and the next week and the week after, all the way until my mid-October. I'm anticipating, if there's a bearish scenario, that price may end up going lower all the way until mid-October. And then from there, price will start resuming higher because folks, it already reached the all-time high. There's only one way I would say it's probably going back lower, but because of Christmas rally and the fourth quarter starting around October, So there's a lot of optimism in the market and a lot of optimism. Yeah, let me just stay with the word optimism. That price will keep going up all the way until December. So that's my most likely scenario here. So stay tuned for another one coming up next week. As this week goes by, we'll get some more updates. We'll see how things go. And I will drop another video sometime later on this week to show you how to get your seasonal tendencies here. It is a very good roadmap to follow. Um, Sometimes you may see things may not go exactly the way you want to, but most of the time it follow the exact same seasonalities of how things goes. That's why I call this a good economic indicator. Um, so what you have to watch out for when it comes to seasonal tendencies is what are the things that makes it go the opposite way, such as Fed rate cuts, and then over the past 20 years, was there a Fed rate cut around the same time? If that's a no, then more than likely you may not see the same exact scenario playing out. So you may have to use a different strategy. So with that being said, thank you folks. Have a good evening and happy trading.